Okay, now let's look at the income estimator to determine your Roth conversion limits. Yes, when you perform Roth conversions, your income will increase, potentially resulting in higher taxes due and also additional IRMA surcharges if you're over 63 years old. Therefore, when planning your conversions, you must be aware of the limit if you want to stay within a particular tax bracket and or avoid IRMA charges. So let's see what we could do to reduce that. Well, the first thing you need to know is you need to know what your income is. So in this spreadsheet, it gives you an opportunity to put down all your income units. So for example, if you have Social Security, you put down the amount. If you're, this is all these calculations are for an example, it's for a married couple. So you have spouse one, spouse two, and then it gives the total. Do note, if you remember, Social Security can be partially taxed. You might want to click on this link to get more information about that. Then, if you're retired and you have a pension, you put down those incomes. And if you have an IRA or any other tax deferred resources that you're taking distributions from, like your RMDs, if you're over age 73, you will want to add these items. And then, of course, interest, dividends, qualified and ordinary dividends, rental, if you have anything, capital gains, long-term and short-term. Now, if you're over 70 and a half, you are eligible for a qualified charitable distribution, QCDs. If you want more information on that, just click on this link. And if you take that, you could then subtract that from your total income. And then you add that all up, and here is your income down here. So for this example, we have an income of $148,000. So let's say you want to determine now what tax rate you want to be in. You want to do some conversions, but you want to stay in with a particular tax rate. So you have to look at the tax bracket table for the year you're doing this. In this example, we're using year 2025. So let's say I don't want to go above the 22% tax bracket for married couples filing jointly. So the maximum amount of money you could be earning taxable income-wise is $206,000 and $206,700. So using this spreadsheet, if you want to pick a limit for your tax bracket, we're going to put down 206. We got it off of this table over here. Now, when you're doing your taxes, remember we have a deduction. So for 2025, these are the standard deductions. So for standard, it's $31,500. If you're 65 and older, as a couple, you can add 32. And you may recall in 2025, there was a bonus senior deduction, and that was $6,000 each. So that gives you a total of $12,000 for the bonus, giving you a total deduction of $46,700. Minus our total deductions. In this case, we're using the standard deduction method, and we're a senior, so it adds up to $46,700. We subtract that from $148,500, and we get $101,800,000. That is our taxable income. Now, we want to stay within the 22% tax bracket. That's our goal. So we put down that number here. That's what we want to stay in. We don't want to go over the 22% with our taxes. Now let's see what we're going to do with our IRMA. Now our IRMA is a lot different. The IRMA is the modified adjusted gross income. It's our total income. We do not subtract our deductions from that, our standard or itemized deductions. So we need to do something different. So we'll talk about that in a second. But let's pick what's the limit we want to go with the IRMA. So we go down to the IRMA chart. And in this particular example, we want to stay at the lowest amount we have to pay for Part B. That is $212,000. Our total income cannot be above $212,000. If it is, then we go into the next bracket. So let's put that down here in this area. So it's 212 is our limit. So let's see what it calculates for us. Tax-wise, if you're not worried about IRMA, but you want to stay in a 22% tax bracket, you could convert $104,900 and still stay in a 22% tax bracket. That's because our taxable income is only 101, and we could go up to 206,000. So that's how much you can convert with no major tax changes. Now for IRMA, we want to stay under 212, but we're already at 148 because we don't include these deductions. So we subtract 212, 148, and we'll get 63,500. So if you want to stay in this IRMA bracket and not pay extra, then you go and convert 63,000. Let's say, all right, you know what? I want to convert a little bit more. Let's see what happens. So the limit then will be 259. Let's see where we go down to our chart and look at that. See, if we're only paying 185, the income for 2025 is 212,000. If you want to go a little higher, up to 266, we would have to pay a surcharge of $74. So that's 185, which is the minimum amount we have to pay, plus the IRMA surcharge, which is 74. That gives us a total maximum of 259. So let's say, okay, you know what? I'm willing to spend $259 this year. Now remember, for 2025, you would pay the IRMA in 2027 because there's always a 2-year look back at your tax return in order to determine your surcharge. So let's go in here. So I don't want to go above $266,000. So I could go over here and I could change this. So I changed that to 266. And now you can see you can now convert up to $117,500 and you will stay in the second IRMA bracket. Now, once you're in the second bracket, you also have to pay extra for your Part D, which is your prescription Medicare. So you have to add it up. And that's per month, per person. So for a married couple, you'll have to double these amounts to get your total IRMA charge. Now, in 2026, these charts are going to change. I provide links here for you for future data. So you could just click on these links, and this will take you to a website that will give you your IRMA estimates and list also your tax brackets. Let me just give you a quick little peek at that. So I'm going to click on here. Now, to use this chart, I have to go into the 2027 bracket because look at what it's saying here. Okay, the 2027 bracket is based on the 2025 income. I'm making this video in 2025, but I'm going to have to pay for this in 2027. However, at this current time, they don't have any data points on what our inflation is going to be calculated for the 2027 year. So I'm going to pick the zero inflation rate. So for 2027, married and filed jointly, the top limit would be 220. And if you want to go into a little surcharge, you then get 278. And you can see the different amounts. And if there is inflation, you go into these higher amounts. But I would pick the 0 because you don't want to take any chances. Because if you go $1 over this amount, it's going to put you into the next IRMA bracket, which would cost you a lot more. Now, this table here, it's telling you what you would pay for IRMA in the year 2025. So really, it's going back looking at your modified gross adjusted income in the year 2023. I know this is complicated, and it actually drives me a little nuts trying to figure it out. Like, why are they doing this? But this is the system. I will provide some links to give you some more additional information. This link here is very helpful. I would open that up and I would look at that in detail and read the writing here because they give you examples of what they're talking about, which is very helpful. So, this is year 2025. I am doing Roth conversions this year. I cannot really use this table here because this table is telling me what I'll be paying for IRMA in 2025. Well, based on the Roth conversions that I did in 2023. So therefore, I need to project what would be the IRMA limits in 2027. And the only way I know how to do that is to go into this website here. And this will give us sort of the brackets. So this is the brackets, which we mentioned before, based on the current year, 2025. So if I'm willing to go up to the second bracket, which will be 1.5 times whatever the standard amount is in 2027, I could go all the way up to $278,000 as a married couple filing jointly. If I want to take a chance and assume there's going to be inflation the next year, or this year up to 3%, then you could go up to 282. I'm not going to take that chance. I'm going to stay on this number. So 278. So let's go back to our calculator here, and we're going to put down 278. Again, this is for 2025, meaning I'll be paying this amount in 2027, but I'm doing the conversions now in 2025. So looking at this chart, 278, you can see it's higher than the, what did they say here? 266. But that's because this is not looking at 2023. So I could go up to 278 this year and be pretty safe. So I would keep, when I do my income, I would go a little under, but it's telling me I could convert up to $129,500, and hopefully that would keep me under 278. So in 2027, I will be paying an IRMA surcharge. If I'm doing the conversions, I won't go up to 129. I will be a little under that, maybe 124 to play it safe, but it depends how accurate you are in your calculations up here. So you want to make sure everything is accurate and projected for what you're going to be doing in 2025. And that's how we could calculate these things out.